And
Okay, so for now it's recorded.
okay, good afternoon. I am very, very excited. This webinar was co-created with very close friends of mine. Um, First of all, Professor Baruch Lev. I've been following him for many, many years since I started to focus my career on knowledge management, innovation management, and a Swedish friend, Professor Leif Edvinsson, since we are recording it, he would love to know that I mention his name. He suggested that I get in touch with an American expert at NYU, Professor Baruch Lev, and I said, of course, because he's one of us. And Leif Edvinsson said that he didn't think that that was the case. And of course, immediately I sent Baruch an email, and he was very kind and responded. And we have created a great friendship. I started attending his conferences in the at NYU in the department which he led, which was across the wall from the department in which I did my PhD years before, and never thought that I should visit the accounting department, which is funny. I think that today I would have been much more sensitive to what happens around me. I come from social sciences, the interface between technology and society, and this is what I studied with Professor Neil Postman, well known in this area at NYU. So this is Professor Baruch Lev. But then I thought that it would be great to invite two more friends of mine that will join us so that we can create a great dialogue together. And I asked Dr. Boaz Tadmor, who is a physician, to join us, and he's here with us. I will say more when we get to each of them. And last but not least, my dear friend Mati Gil. I've known him for many years, I think a short time after he immigrated to Israel from the United States. And since then, he have developed a great career himself. So I don't want to take up more of the time. I will just add something about the topic. If you are busy managing knowledge, which is what I do, or managing innovation and helping companies and managers do it, it is very important that you should know how to measure it. And Professor Baruch Lev is absolutely the leading expert in the world in measuring intangibles. He used to be the dean of the Faculty of Management at Tel Aviv University, and then he went to the United States and developed a great career in this very innovative field. I have to say that he has been my source of inspiration because, you know, coming from social sciences and before that, even liberal arts, I always have an inferiority complex that people who are good with numbers know much more than I do. And then I learned from Professor Baruch Lev that it seems that many of the old methods of accounting are no longer valid. And this, of course, made me very happy. And he's pioneering research in the area of measuring the intangible or measuring what cannot be measured usually is a great, great support for my work. I want you to know that he was an expert at the American Senate when he was invited to share with them his ideas regarding this very challenging area. So it is such a great pleasure to welcome him back to Israel and to ask him to give us the keynote in this webinar. Thank you all. Baruch, if you want to add something about yourself, please don't be shy, go ahead. And if I made any mistake, I apologize. The floor is yours. Professor Baruch Lev.
Thank you very much, Edna. I will go straight to the topic. I think you said too much about me. It will be difficult to live up to all these expectations, but I'll try. I will speak today about a specific issue, but a very important one, as I think you'll agree with me when you see my presentation. Now, it's not an exaggeration to say that investors and the stock market are the lifeblood of biotech companies, particularly small and medium-sized biotech companies, and in fact, of all high-tech companies. The assets of these companies are mostly intangible assets like patents and brands, and particular talent of R&D people. These are great assets, but banks don't accept these assets as collateral. So these companies cannot get bank loans, and they have to, after the first rounds of money that they get from venture capitalists, they have to raise money from capital markets. Now, these days, capital markets demand performance, demand earnings, demand income. The good old days of just showing them that we had lots of clicks on the website, or not paying users that are not paying, this will not be accepted. They want to see earnings. As an aside, I'll tell you a quick story. I have a good friend of mine who is a professor of finance at Columbia Business School, also in New York. And he starts his finance course by saying, who would invest in a company that showed 10 consecutive years of losses? Now, usually he says, have the class look at him as if he completely is mad, and have the class looks around if they are in the right room. But of course, no one says that they'll invest in these companies. And he says, the professor says, too bad, because what I have in mind is Amazon or Tesla. These are companies that showed more than 10 consecutive years of losses and are now among the largest companies in the world. But that's mainly because they have such incredible, charismatic CEOs that could convince investors to be patient for the long term. Most human beings as CEOs are unable to do this. And as I said before, investors want to see performance. The problem is that most companies, and particularly high-tech pharmaceutical companies, are showing losses. Boaz, if I can have the first graph. What you see here is for all US public companies, that's about 7,000 companies that have shares traded in the stock market, about a 70-year view from the 50s to 2019. I stopped in 2019, the last full year before COVID, which most people will agree was a terrific year for the economy of the companies. And as you see from the top line, the yellow top line, the right end of it reaches 70%. The line shows the percentage of public companies. These are companies with stock in the market that show annual losses, negative earnings. Can you imagine 70% of high-tech companies in one of the best years of the US economy show losses? The line below it, the blue one, is for all companies, not just high-tech and science-based. This also gets to 50%. So half of all US companies are reporting year in and year out losses. If you think it's only a US phenomenon, the other two lines that you have there, starting in the middle, because this relates to EU and the UK. I didn't have data going back to the 50s. I start, I think, with the 80s. But you see a similar picture, slightly less, lower percentage of losses. This will become clear in a moment why. But it's about the same pattern of a huge number of established companies, not your companies, established companies, with stock in the market that show losses. Now, the reason for these massive losses will become clear in the next slide. And this slide shows a very dramatic transformation on the US economy in the last 40, 50 years, but particularly from the mid-50s. The yellow line, which starts from the top at the left and goes down and down and down, that's total investment of American corporations relative to gross national product, total investment in tangible, physical assets like buildings, like airplanes, and so on and so on. And you see that the rate of this investment goes down significantly. On the other hand, the blue line, which starts low and goes up and up and up, that's total investment in intangible assets, in R&D, in patents, in brands, in human resources, IT, specific processes that companies are using to make money. So this is an economy that completely transformed itself. Most people are roughly aware of this, maybe not of those huge magnitudes. On the right, the year, that's the last year I had data on, 2018, the total investment in the US in intangible asset was 2.5 trillion with a T dollars. That's an unimaginable amount of money. Now, why do I show you this thing? Because while people are aware of this transformation and the ramification of this transformation, most people are not aware that accountants completely ignore all this. Accountants still insist on showing physical assets, the line that goes down and down and down as assets on the balance sheet. But intangible assets, investment in R&D, in brands, in human resources, in IT, they expense in the income statement. I don't want to get here into details of accounting, but this means, expensing means that it reduces reported earnings, reported income of companies. Accountants actually regard the most important investment that companies can make in R&D, in brands, they regard as regular expenses like paying salaries and rent and taxes, things like this without future benefits. So while companies become more and more innovative, invest more and more in intangibles, and become more and more successful, most of them, if you look at their income statement, they show more and more losses. It's strange, but that's the fact. You just saw the data that I showed you. 70% of all American high-tech and science-based companies are showing every year an annual loss because of this craziness of the financial report of companies. Now, if we regard as should be regarded by accountants, and I fight accountants for 30 years now, if we regard those investment in intangibles as really investments, the definition of investment in accounting is something that promises future benefits. If we regard those as investment and correct the income statement accordingly, 45%, almost half of all the companies that show losses, actually turn their losses to earnings, to profits in this case. So the effect of this expensing is actually massive. Now, since some of you, maybe many of you, will have to deal with investors, I would like to take 3-4 minutes and bear with me to show you, and it's really an easy exercise, to show you how you can easily capitalize intangibles, how you can easily undo what accountants are doing. So if I can have the next graph, this is Seagen, which is a real-life, medium-sized American biotech company. Some of you may be familiar with these companies. Now, let me quickly go with you of what I do here. On the left column are just the years going down, 2022, the last full year of financial report, 21, 20, 19, 18, 17. Second from left column is the research and development of these companies. You see that Seagen invests 1.3 billion or milliard in Hebrew dollars in research and development. And this is regarded as regular expense. That's the main reason they show losses. Massive losses, as you'll see in a moment. So what I'm going to do, I'm going to regard the research and development of these companies as investment. And as all investments, they don't stay forever. They should be amortized. Even if you have a successful drug or medical instrument that you developed, competition will sooner or later come in and will shorten or completely stop the life of yours. So I assume the 5-year life of R&D for this industry. And if you look at the third from left or second from right column, I compute the amortization, the depreciation of this new capital that I created, R&D capital. So for the year 2022, R&D just was invested, started. I didn't lose any value. So you see the line, the horizontal line. I don't amortize anything. But for the previous year, 2021, where the R&D was $1.229 billion, now a year passed for this vintage of R&D from 21 to 22. For 5 years of usefulness, 1/5 of it has to be amortized. That's the 246 that you see there. Going back to the year 2020, it also passed 1 year. 1/5 amortization is 165 million companies. So the total that you see that are circled in red is, if I regard R&D as capital, as a building that a company bought, as an airplane that a company bought, the amortization of this will be $759 million instead of the top red circle, 1,344, which is now expensed. Now, the column on the right is SG&A, that's sales, general, administrative expenses. Many intangibles are there, like information technology and brands and human resources. I also capitalize 1/3 of this, which is 269. If I can move a slide. The next slide, please. I show you how I adjust the earnings of these companies. So for the year, that's the top line, for the same company, CGen, for the year 2022, reported earnings, as in the financial report, as reported by accountant, was a negative $610 million. So this was a heavily losing company. What I do, I add back the research and development that you saw before for 2022, which is 1,334. I don't regard it as an expense. I deduct, you see the minus, $759 million for amortization. I add the 1/3 of sales and administrative expenses. And lo and behold, this company, instead of showing losses, shows a profit of $244 million. These are the 45% of, this is one of the 45% of companies that I mentioned before as reporting losses, but if you do the accounting right, they are actually profitable. Now, I want to show you that this is not just a hocus pocus that I made here. I will prove to you that what I do is very valid. The next slide, please. If you look at the left, we have many things in this slide, but if you look at just the left two bars, the blue one and the yellow reddish one, this is the percentage of companies that last year reported a loss, but this year reported an earnings, positive income. The blue are those companies, we call them GAAP losers. GAAP, in the terminology, is generally accept accounting principles. GAAP losers are losers just because of the silly accounting that they have to use. So the companies like CGen, more than 40%, 42% of these companies in the following year show already a regular profit. Even according to accounting, it's a regular profit. But the other ones that even after my adjustment still show a loss, only 18% of them turn losses to profits. So the exercise that we do is very valid in differentiating the two groups of real losers from real profit making, but showing losses because of accounting. If I can have the next one, this will be my last slide. The next one shows if you are an investor and you do the simple exercise that we do, and you started investing $1, this I think in, look again just at the left two bars, I don't have time for the others. If you put $1 in these types of companies in 1980, by 1970, you will have $38.39. This will grow from 1 to 38 These are the companies that show losses, but according to our computation, are actually not only profitable companies, they are very innovative companies. The middle bar are companies that show profit. Clearly, if you invest in them, you made lots of money in the good years. But the very low, the almost indistinguishable bar on the right of the three, there are the real losers, those that still remain losers even if I capitalize the R&D. If you put $1 into these companies in 1980 and wait like 40 years, you will have $3. You basically lost a lot of money. So what we do is very real, and this is something you can do when you present your company, even if you show losses to investors. I just want to take 1 minute to tell you, it sounds like a joke, but it's a true story. 3 years ago, I'm sitting in my office at NYU in New York, get a telephone call. Some people still use the telephone. And the person on the other side says, Professor Lev, I was a student of yours. He tells me his name. I never remember the name, so I said, yes. He said, I wanted to thank you. I just got a job at Pfizer, the largest pharmaceutical company in the world. I just got a job at Pfizer because of you. I said, wow, congratulations, but how did you do it? So we said that he interviewed there, and apparently he was quite good. So he went through 6 different interviews and passed them. And the last one was before 3 top executives of Pfizer. And they asked him several questions. And then one of them asked him a question that it's really a very unfair question. You should never ask, particularly a student, such a question. He asked him, what can you tell us about Pfizer that we don't know? These are executives that spend their life in Pfizer, and they expect a student to tell them something that they don't know. So he told me on the phone, he said, first I panicked. Then I remembered what you showed us in class. I showed them in class the example that I just showed to you, how to capitalize R&D. And I told them, I can tell you what is the true income of Pfizer. So he said, they looked at me and he said, what do you mean the true income? We report the true income in the financial report. I said, no, this is not the true income. You expense all the intangibles. Here is the way to calculate your Pfizer's true income and return on equity and return on assets. He got the job. I don't know how much of it can be attributed to my thing, but he thought a lot. But this is a very valuable exercise that you can do. What do you do when you approach investors and you have losses? But remember, losses just because of the expensing of intangibles, not real losers. There are many who have losses because they just sell at losses, don't have enough revenues. I'm speaking about this group that is affected by the accounting deficiency. If you are one of those, and that's about half those that report losses, you can report what is called, and it's very common in the United States, non-GAAP earnings. Earnings not according to generally accepted accounting principles. 87% of all the S&P 500 companies, these are the largest 500 companies in the United States, report, in addition to the accounting earnings, non-GAAP earnings in which they make reasonable adjustments to show the real performance of the companies. And you say to these investors that we are not losers. In fact, we are great innovators, and the only reason why in the accounting terminology we are losers are because we have to expense these things. And this, I think, will have an impact of investors, whether these are early stage investors, late stage investors, real investors. If you have any problems with these people, just give them my email. I'll forward them my papers that this is based on, already got several prizes. And I think your position vis-a-vis investors in terms of raising money will be much better than if you come with those miserable accounting reports, which will show you year in and year out as perennial losers. Thank you very much. That was my message for today.
Thank you very much, Professor Lev. Very, very exciting as always. I would like to suggest that we move forward, and then we leave a few minutes at the end for questions. And those who would like to stay beyond the end of the hour for more questions are welcome. So our next contributor, Mati Gil. Mati Gil is the CEO of Ion Labs, and I visited there with our students, and they were fascinated by what Mati is doing. And the floor is yours. Thank you very much, Mati.
Thank you, Edna. And it's quite a challenge to come and speak after Professor Lev. So hopefully I'll be able to live up to some of those expectations. But it's an honor to be able to present here and to see some familiar faces here amongst the participants. So as you mentioned, my name is Mati, and I've done much less than what Edna claims that I've done, but I have the honor of being the CEO of Ion Labs at the moment, which is a tech bio venture studio helping to bring cutting edge AI and computational technologies into drug discovery and development. It was established by this group of partners that you see here, and I'll explain in partnership with the government, and I'll explain a little bit about how we work as we go through. Next slide. And we're relatively new, I'll just mention. And the first question you could ask is why this was established in Israel, because you have all these global partners coming for pharma companies. One is Israeli, but even they're a global company that primarily has most of its employees outside of Israel, as well as the market, of course. But the others, as well as Amazon and two VCs that decided to establish this, and they decided to do that in Israel. And for those who know the Israeli pharma market, the Israeli pharma market is not necessarily known as being a thriving pharma biotech ecosystem that has built and helped grow. We haven't yet built and helped grow a whole generation of startups like you've seen in other ecosystems throughout Europe, some in Asia, as well as in the US, of course. But if you look at where the future of our industry is headed, which will increasingly place an emphasis on the tech part of the biotech equation, that's where the belief is that AI capabilities that Israel has been able to bring into multiple other industries, cyber and fintech, everyone knows, but also in the auto tech industry, where we have over 600 startups, including several growth startups and the flagship company for autonomous driving that came out of Israel called Mobileye. That as our pharma drug discovery and development industry increasingly brings in the capabilities of computational technologies into its processes, that's where Israel can play a role. And if you click on the next link, you'll see a nice little animation here, Eitan, that shows that Israel can be and will be a very competitive ecosystem amongst those in the world that will help to bring and usher into the future of our industry, cutting edge AI technologies, which our industry understands the capabilities of, but has yet to see validated maturation of those kind of capabilities at a full scale. But we're already starting to see it happen in Israel. And if you click on, you'll see that box at the bottom as well, that we have multiple growth startups starting to grow, raise their first rounds and their growth rounds, as well as multiple pharma companies that are coming from the world to Israel to establish strength and presence here. Pfizer and AstraZeneca that conducted their first R&D investment in Israel and an Israeli infrastructure and ion labs, but also others such as Sanofi and GSK and Lonza and others that are increasing their investments in Israel. Next slide. So what do we do at Ion Labs? We create companies on average of one per quarter in a venture studio model, where we either create a company that starts with the definition of a problem, or we start with a great team and technology, but then conduct problem validation. And what we do is we take a look at all of these elements, and we start by asking our pharma partners, what are the biggest challenges, their R&D scientists, what are the biggest challenges that they believe AI, artificial intelligence, and computational technologies have the capability to solve? And we define a very clear problem statement, which is the nexus of what every good startup needs, is what are they trying to solve? And then we go out to find great, talented founders and identify them, providing them with access to data so that they can then be able to build trained models that will be able to impact drug discovery and development. And then we help them to validate their technology, to develop their technologies, and then to validate that it actually works. And if you go to the next slide, you'll see that we're working in a model where we offer our talented people that we are going to partner with them from day one in the development of their technology, bringing in all the elements necessary to help remove many barriers that exist in developing good companies in that space. Because if you think about it, you need the pharma partners to provide access to their data, their expertise, and to help define the problems. You need cutting edge cloud technologies and computational technologies that are not the pharma strong suit in the AI space. And you also need great investors that can help make sure you're building good companies and not just research projects. And you need financing, of course, for that. And then you need talented people. So we brought all of those components together to work as partners hand in hand from day one. And as you know, some of my friends here on the call have already been part of our processes. We really work together with our pharma partners to define the challenges, and then to go out with the help of BioMedX to seek out talented people from throughout the world, run a competitive process where we then offer, we then invite 15 of those candidates that apply to Israel and get to know them throughout a 1-week workshop that we call boot camp, because it's in Israel and everything has to have military connotations, but it really is a tough 1 week, but they get to learn a lot from it. And at the end of that week, everyone pitches to our investment committee, and we offer them the opportunity to have at least $1 million in funding to build their new startup on the cloud of Amazon, with the support of the Amazon team, to be able to really build up a scalable technology that can impact the industry. And we give them up to 4 years in Ion Labs to be able to do so. Next slide. So we've already done that 5 times. Our 6th one will be in September. We've had 2 in the antibody space, 1 in antibody drug discovery, antibody design, the other in antibody optimization, as well as in tools for clinical development and clinical trial readiness and clinical trial outcomes. And finally, just our recent one is, how do we use AI to be able to identify molecular glues, and from there to be able to discover drugs and to be able to help pharma companies discover drugs. We've seen also very talented people from a very diverse set of backgrounds. So well over 70 AI computational scientists in the life science industry, coming from both AI and biologic backgrounds, and sometimes with both. expertise. They've come from 5 out of 7 continents throughout the world, so we're still waiting for a candidate to come from Australia. But other than that, we've seen people coming from everywhere. We are open to candidates that can come from anywhere in the world, as long as they're willing to move to Israel for the role and for the building of the company, because we do want to work with them in building the company from day one. And we've seen winners that have come from very diverse set of backgrounds. So 3 out of our 5 founders or winners of our bootcamp are coming from abroad, from Europe. One is a team of Israelis that worked with us for a little over a year until finally in a venture studio model. It's also important to decide on which startups are not progressing well and to be able to take that decision. And we did that with them mutually. And the 5th is a team that we're establishing at the moment. So it's really been great to be able to see these type of candidates and to be able to see very exciting opportunities. And our 6th company will be building in this model in September. We'll select the founders in September. Next slide. But beyond just logos on a wall, one of the things that we help offer to our founders is that from day one, they get all the expertise of these subject matter experts that come from multiple pharma companies and Amazon, as well as VCs. In this case, there weren't VCs in this bootcamp, but we bring in 12 in this case in our 4th bootcamp last year, and I could create a slide for each topic that we tackle. We bring in multiple subject matter experts that are in the corner of these startups from day one, and their advisors, and help them to develop their technologies. And that's something that's of incredible value to an early stage startup. Next slide. And I think that is it. So it's just really an open invitation. We're very accessible for those that want to talk to us. You can follow us on LinkedIn, on Twitter. You can follow me personally. You can reach out to me. My email is here. Anything you have, I'm happy to respond to. We're very responsive, and if we could help with anything in your journey, happy to do so. Thank you.
Thank you, Mati. This was very interesting, indeed. And after we heard 2 perspectives on what can be done for you guys, one is measuring and presenting the companies, and the other one, a great infrastructure to help you grow. I am very happy that my dear friend, Dr. Boaz Tadmor, he is a physician, and he was the CEO of our leading hospital, Bellinson, and the head of the research and innovation unit in the Rabin Medical Center, which has 4 hospitals there. And he is someone who will bring the perspective of a new point of view of looking at the whole world of medicine and innovation and physicians and needs and physicians as investors. Today he's an investor too. And we have some background together. So we suggested that I will just ask him some questions following the first 2 presentations. And we do a lot of work even with Limor, who is here with us, and we always co-create things. So we are going to co-create this last presentation together. So Boaz, I suggest that, first of all, you are on mute, so you have to unmute yourself.
With your permission, I would like to say some comments. I am a physician already more than 40 years. You can see according to my face and hair, and you don't see my belly. So I was heading the R&D in the medical corps in in the IDF, and I got the first Israeli that got a grant from DARPA, if you know DARPA, for a patent of mine, and 2 grants from the NIH, as I was a professor at Columbia University. Then I headed Bellinson for 10 years, and then I headed the research authority and the innovation authority at Bellinson. The last 2 years, I left Bellinson, and I'm now helping very, I would say, small and innovative biotech companies, and doing what I think the most important is some social, I'm putting a lot of my time to help people to get real medical help, people who cannot afford themselves. So I have to say some comments. One comment is to take what Professor Lev said and Mati Gill said. The human being is the most complicated, complex, chaotic company there is. And all the effort that you are doing is to understand it. And you can value human being not only by tangible, but most from intangible, like value, culture, belief, how he is working and what he is saying. We can see it around us. And as a company, and he is the most complex from all kinds of biological elements and chemical elements and engineering elements. So what you are doing, Mati, is only a part of the human intelligence and the human machine learning and so forth. So the real challenge as a physician researcher is to understand the complex world of the human being, what we call so-called the challenge of the patient-centered. But today we are not only patient-centered, we are team-centered, which is the patient and the team and the family and all the ecosystem. And that is the real challenge, how to see all the ecosystem from A to Z, tangible and intangible, when to put influence on tangible, when to put influence on intangible, and human intelligence and machine intelligence and human learning and machine learning. This is the real challenge. And the challenge is to really, I would say, promote this understanding to the all level of people in the hospital, from the garden keeper to the most intelligent and the high level physician. Only by working together, understand the complexity of the hospital, of the patient, you can really do a real impact. So there are some elements that you have to understand. First of all, what is a real impact? At the level of the patient, or at the level of the team, or at the level of the hospital, or at the level of the healthcare. The second is to really to look for the gaps. And for this, you need to promote curiosity at the hospital. Believe me, even though the physicians are very intelligent, some of them are engineers and PhD, and the nurses, some of them also are PhD and so forth, they don't understand really what is to be curious, how to ask questions, how to look for challenges, how to look for gaps, and how to understand really what they are meant to do every day. If you look every day at hospital of 1,000 beds like Bellinson, and you can look for risk communication, there is more than 1 million elements of risk communication in the hospital every day, from the patient, from the team, from the visitors, for everything, for the technology and so forth. So this is the real issue. The issue is not only tangible, but also to understand what is a complex system, by understanding the complex adaptive elements that are working together. The hospital is the only company that change between 20 and 30% of its patients, of its workers every day. Every day a hospital of 1,000 beds send home between 200 patients and get 100 new patients. Those patients are unknown what they need, where they need, and when they need. And you have to take all this together and to bring together. About the pharma, most of the pharma today are looking through AI, machine learning, and so forth. And I did more than 1,000 clinical studies, most of them with pharma. They are looking about pathways, about intervening some pathway. But the human being is not a pathway. The human being is a endless feedback of pathways. And the medication or the medication or the treatment is going into 1 or 2 or 3 pathways in already very well feedback mechanism that worked already, because we never know when the disease started. If not infection, not congestive heart failure, and not dementia. So they need to look, I think, not only take technology and talents and money, but also to make some, I would say, philosophical understanding of what we are doing. And this is, I think, the real challenge of where to look at technological companies, pharma companies, and so forth. We need to look at a complex adaptive system, how they are working together in feedback mechanisms through all the way. Small comment.
Small but very important. Small but very important, Boaz, to give the overall picture of the complex world in which we all operate. Of course, biotechnology is our topic today. Now I open the floor to those of you who would like to ask questions. Any question to any one of our presenters today. No question? Raz, thank you.
Hi.
Yes, Raz.
Yeah, okay. So thank you all. Very interesting points here. I need to still contemplate, but I had a question for Baruch actually. So again, in my experience, I work with companies that are only losing money. So the only income is basically investments, capital investments. So if I understand you correct, there is the R&D expense that is basically the opposite side of the investment. So basically, if we look at it in a different way, you only cut 20% of this income. So you basically spread it over a few years, and thereby you balance the sheet so that you really show that in the long term, this company is actually gaining more money because there is some horizon of reaping the benefits of this investment. So really my question is, I'm trying to think here. So how do you calculate the income of this startup company? Like what is the incoming fund basically?
Well, the situation now is that all investment in intangibles, and not just in R&D, R&D is not even the biggest intangible. Information technology is usually larger than R&D. But all of this, in the accounting terminology, is expense, is reduced from revenues, from sales, in order to get from sales, in order to get net income. And then it disappears. There is nothing on the balance sheet that reflects the values of patents. If you look at Pfizer's balance sheet, you'll see something which is really absurd. You'll see that they have some cash. You'll see that they have some investments. You'll see that they have some inventories and some people who owe them money. But this, of course, these are not value drivers. All the value drivers, all the patents on the drugs that they sell, bring billions of dollars a year, are not on the balance sheet because they were treated like salaries that were
expensive
for the past. So what I do is,
now it's clear.
I move them from the income statement to the balance sheet, but if I may say so, not in a primitive way, but treating it like any other asset that depreciates. And I show you how I depreciate it over time, depending on the life of the R&D.
I guess this is project specific as well. I mean, you look at the development stage, a phase 1 company has 10, 12 years maybe ahead of them without income. So, okay.
Yeah, so it's project specific, but I treat them as asset, relieve the income statement from this huge expense. Hence, in about half the cases, what appears to be a loss is actually a profit. In this case, that's the essence of the exercise.
Very, very interesting. As an outsider, it's yeah. Thank you.
Any other question? So if you don't have any more questions, I can see that some of you have already to leave, including
perhaps Edna, I want to because it's a biotech company, as a head of the research authority and innovation authority, we were looking very much for very early stage innovative companies in the hospital to bring new ideas and new capabilities to a third level hospital that has really all the capabilities to help young companies to go ahead and to see and to try to validate some elements. And the companies, by coming to the hospital, sitting together, thinking together, I think that the challenge was only not to fulfill the gap that the company brought, but also to see the company, perhaps the idea of the company, this is the most important, is a platform to use perhaps in other area than the company is working for the hospital, because the hospital is the whole world and the company is bringing new technology or new platform. We need to see if we can put together all kinds of ideas and to see the platform. And the hospital is really the only, I think, place to a third hospital, a tertiary hospital is the only place that can think and act to bring together such a complex teams to work together. Like Mati did with the pharma, we can do with technology and with pharma and with some other innovative idea like AI, machine learning, and so forth. For example, and I will say in the corona area or corona period, I met with people from a company that work with the army. They are doing the artificial intelligence and machine learning for Air Force attacks and Air Force fight, קרבות אוויר. And they were at Sheba and Ichilov and some other places showing their algorithm, and they didn't know what to do with them. When they came to me, I tried to understand what is Krav Avir, what is the Air Force fight. And it seems that Air Force fight, it's a lot of knowledge coming very quickly, and you have to decide very quickly. And sometimes is the decision is irreversible, and you are working in a place with chaos and unknown. So I took their hand, brought them to the corona unit, intensive care corona unit, which is the same elements as the algorithm. And we did a study of 2 years. At the end, with a paper in Nature. So this is a way how to work together.
Thank you, Dr. Boaz Tadmor. Professor Baruch Lev, would you like to add something as a checkout?
I think I said enough, but I enjoyed it very much.
Thank you very much. I think that we all did. And I would like to thank you very much, Professor Lev, Dr. Boaz Tadmor, and Mati Gil. Special thanks to Eitan, who was leading this effort, and to all of you who joined us. We now are a little community, a little ecosystem. You are all welcome to stay in touch with us. I can say that Boaz, Limor, and myself, we are a team with a lot of passion to help startups in the field of biotechnology and medicine and healthcare. And we would love to hear from you. Any idea that you have, any visibility that you need, we are always open to collaborate as we showed today. So many thanks to all of you. And take care, stay healthy, all of you. That's very important. Thank you very much.
I say take care.
Thank you.
Thank you very much. Thank you very much. Thank you.
Bye. Thank you.
Bye.
Bye.
And thank you